Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management. Today is Saturday, February 17th at 5 o'clock p.m., coming to you from Boca Raton, Florida, to bring you the Revere Roundup Weekend Walkthru. And as always, let's start with a Grotection gauge. We have the four coveted green arrows, starting with the market leaders in very good shape this week. Both leaders and earnings reactions were very positive. All the short, medium, and long-term averages for the indexes, the S&P and the NASDAQ, were all above those key moving averages, with some neutrality in the mid and small cap area. Let's start with an index review for the week. Go on the weekly chart here. We have the S&P 500 up 1.47% on the week to a new closing weekly high. We started off the week on an up note. Wednesday, we had a hot CPI. And as you can see by this chart, we gapped down, however, closed toward the high end of the range on the day. If we look at the 30-minute chart on Wednesday's action, we gapped down here, quickly made lows despite the hot number, and we rallied straight through into Friday afternoon. So very positive sign there. NASDAQ Composite also a closing high on the week. Both the S&P and NASDAQ Composite are just off their all-time highs. However, the NASDAQ closed up 2.58% on the week, and just a shooting distance from the all-time highs. However, the NASDAQ 100 equal weight did make a new 52-week high on the week, which is a very good sign because it's a broader based weighting of the NASDAQ 100, and it's really the only index that's at all-time highs. So that's a very positive sign. And the S&P equal weight is really just going sideways here, not much progress. The equal weight S&P on the week was up 0.5%. The Russell 2000 was relatively weak, below the 50-day moving average and basically right at the 21 EMA. The mid caps, same situation. Both of those are below the 50 and the 21 EMA. The VIX was able to close down into the 14 area, which is very positive. And US dollar also finished the week down. It's the lowest it's been in several weeks, which is positive for US earnings overseas. The 30-year Treasury has been on a downward trend. This is the yield on the 30-year Treasury, currently at 4.69%. And then finally, the 10-year was able to basically maintain within last week's range despite some hot economic numbers. And we closed basically down 0.33% on the week to a closing yield of 4.472. You can see 2 weeks ago, we peaked at 4.8% on the 10-year. So this is also a good sign, and it's a tailwind for stocks. So to highlight some of the better acting themes for last week, the FXI, which is the iShares China ETF, in a solid stage one cup base, basically broke through this clean and simple area here in development on the weekly basis, as well as this big cup base on the daily chart. So that's very constructive for China after, as you can see, a couple of years of a pretty steady downtrending action. The IBD 50 also was able to break out of a stage one base. These are the types of stocks we like to see on the move, so that's very positive. And also ARK, the ARK funds ETF, which is made up of the riskier growth stocks, also broke out of a stage one base, which is a very good sign. And you can see on the daily chart, it broke through this flat base on some very strong volume. All right, so that's it for the weekly review on the indexes. As always, let's go to the Magnificent Seven to see what the heavyweights are doing. NVIDIA continues to trade sideways basically since last summer and the end of last spring. As you can see, it's really kind of been in this 28% range, and it was able to regain its 50-day moving average this week. So that's a positive development for NVIDIA, and that definitely helped the indexes this week. Still relative strength lagging, and the accumulation distribution is an E. So still not a lot of accumulation here, but earnings coming up in 2 weeks, and that'll give us a good indication whether NVIDIA will lead or lag going forward. Not much going on with Apple. That's was managed to fight its way back above its 50-day moving average this week. Microsoft really just trading sideways in this flat base below its 50-day moving average and 10-week moving average. Meta by far the best acting stock, up really 19 days in a row here, I think, if not 20. Extremely strong action, and look at the volume, just a wall of blue here, which is outstanding. Amazon right on its 10-week and 50-day moving average. And Tesla, after 3 or 4 rough weeks, did find a bottom interweek on Tuesday. Undercut, which I'm not showing here, its 100-day moving average, which is somewhere around here. Did hold that 100, actually the 150-day moving average, and bounced a little bit on the week. Overall, we have Tesla holding up around the election support area, so maybe we can develop some type of a base here. And Google below its 50-day moving average. Not much going on here, and that's it for the Magnificent Seven. Let's go into last week's earnings, notable movers. I've highlighted all the positive ones here on the week. This is a Grotection holding. Dutch Bros, extremely strong earnings reaction on top of several weeks of upward extension, and then finally a beautiful gap up Thursday morning, closed up 29.10% on the day on a 449% pickup in volume. Extremely strong action. Also very notable is this move above its IPO levels from 2021. So we'd like to see this perhaps hang up here, hold the lows of this gap up, and build out maybe some type of post-earnings flag formation with the expectation of this moving higher. They also announced they're going to be opening 180 more stores this year, which is approximately a 19% increase. So this is a big growth story with a lot of runway left. There's virtually none of these in our state of Florida. There's none in the Northeast. Most of them are out west or in the middle of the country. So this is a big story here, potentially. Robinhood, another one of the Grotection holdings, a very strong week, and another earnings gap up of 14.1% on a 224% increase in volume. Look at this huge volume here. Lots of accumulation going into this earnings report, and not quite up to its all-time highs, but really a closing high for the week. It's never been this high on a weekly closing basis. So another one we will continue to hold. Watch for it to hold the lows of this gap up and maybe build out, a 2-3 week consolidation flag, and possibly add to this one as it's innovating the fintech space. AppLovin, just after last year's breakout on an upgrade back here in September, just a massive run, huge earnings gap in November of last year, followed by a post-earnings run and a beautiful beautiful cup base of, oh, how deep is this? Okay, not really showing here because it's getting covered up by my, okay, here we go. 26% deep base, 44 days, followed by another earnings gap up, huge earnings gap of 24% on a 270% increase in volume. And this one looked like it was going to reverse and fade out, but it ended up coming straight back on Friday to close really in the upper end of the range for the week. So on a weekly basis, it closed in the 91% range. So this is just extremely strong action out of these massive earnings gaps and runs. Another one, Grotection added to this week that is displaying very strong action is Confluent. Confluent had a nice earnings surprise with a 25% gap up on 400% increase in volume. It did fade back a little bit on the week, but closed basically right at its pivot on this consolidation of about 50%. So just a little bit of backfill. Uh, the biggest volume it ever traded on a weekly basis in this big stage one consolidation. So nothing wrong with this. We're going to wait and see. Hopefully, just some tight action around here, and with the intent and the expectation of this potentially breaking out again here over the next couple weeks. Airbnb was another positive earnings gap. Did not break out of any type of base, but came through these highs from last year and also traded big volume. So we're talking about a 14% gap on a 64% closing range on a 350% increase in volume. So this is another one to watch. Very strong beat and raise quarter here. DraftKings broke out of a stage one base. This was unexpected. Big volume on the week and a close right at the high of the day on huge volume. So this is another one we'll be watching. Roku, another stage one base breakout this week. The biggest volume it's traded since last spring. And this one gapped up 14% on 433% increase in volume. The company currently expected to lose money through fiscal 2025, but expecting profitability next year with strong triple-digit earnings growth coming in the September and December of 25 quarter. So could be interesting. Roku also coming up against some of this resistance here from last year. So we'll keep an eye on that. Almet Aerospace, very, very strong stock, just grinding higher for the last couple of years. Close the week out at all-time highs after an earnings day shakeout. High close on the week. Just a little bit of a shakeout here, so that's positive action. Shopify, new 52-week high on the week on earnings after an earnings shakeout down to its 21-day moving average. Also closed the week out at the highs. And Monday had an earlier report on the week. Monday, actually that came out Friday of the previous week, so that shouldn't be in this section, but just faded back. DoorDash, another very powerful new high on earnings here. Wall of blue on the daily volume here. Record volume probably on the weekly. Let's see. Not quite record, but it's up there. Still below its all-time highs from the IPO, but making headway. Shark Ninja tried to break out, reverse back in. This is a company subject to a lot of manufacturing in China and overseas, so I think there is some worries about tariffs here. However, this could build up and make another breakout attempt as their guidance supposedly includes the impact of the tariffs, and they had positive guidance. So we'll keep an eye on this. They have a new product out, soft serve ice cream maker that's sold out for several months. So this company is very innovative with many new consumer products. Reddit, one of our Grotection stocks, didn't have the best earnings reaction, was holding the 21 day, however, broke through that 21 day. We have a massive profit on here. We've taken some offensive sells, but overall, still very strong, and we're continuing to hold this, and we'll watch how it behaves next week. John Deere is another one coming out of a stage one base on the weekly to new all-time highs. Not a fast stock, but nonetheless, outside of technology and displaying some strong action after an earnings shakeout. HubSpot's another stock that tried to break through the all-time highs from back in 2021. Faded back a little bit, but is still one to watch. Upstart was a positive earnings gap. However, I believe they announced an offering and it faded back in and was not able to hold its breakout for the week. Lattice Semiconductor is a semiconductor stock, of course, that has been quiet for the last couple years. Building this little stage one base, had some big volume on the week, closed at the high of the week, and we'll watch this for a potential earnings break. Cisco, slow, but multi-year highs here on Cisco. Incidentally, folks, this is why you want to have discipline, because the old highs on Cisco were from March of 2000, and this stock has still yet to break that level. We're right in the thick of it, and Cisco has spent several years just working on this consolidation. So slow mover, but good action. And that is it for this week's earnings stocks. Let's go into some stocks to watch for the week. We mentioned China, and I'm going to start off with a few Chinese stocks. You can see Alibaba broke out through a stage 2 cup with handle base. However, we talk about two different types of stages. There's the IBD stages, and then there's the Stan Weinstein stages. This would be a stage 4 decline in Stan's vernacular. And then this basing is a stage 1 base. So a little bit different than the IBD. And this stock really came out of this big stage 1 base this week. And this is very notable with huge volume. So we're watching these Chinese stocks. They've spent years just dropping since they peaked in 2020. So really 4 years at least of stage 4 and then stage 1 basing. And JD.com is another one that's coming out of this as well. On the daily, this is a perfect double bottom base. So what you have here is this drop, rally attempt, a slightly lower low from the previous low, with a rally back up to this mid high, and this mid high now becomes a pivot for a double bottom base. So if we see a breakout above this double bottom base on big volume, that would be a buy signal for JD coming out of it had the stage 1 cup with handle, but this could launch this into a new Stan Weinstein stage 2 uptrend. Fudu Holdings is a online brokerage firm in China. You can see the relative strength is very strong on this stock. Earnings and sales are classic can slim, with well above 20% revenue growth and solid 80, 50, 30, 29% earnings growth for a stock that trades at a very low multiple at 28 times earnings. This is very attractive. Grotection initiated a position in this past week, and it's building out a cut base. perhaps we'll see a little bit of consolidation and a little handling out of this, and you can add on to it on a handle breakout. But good volume back here on this breakout, and then a good volume week this week. BILI is I believe it's a Netflix of China. This is another one that is looking good. Had big volume on Friday, earnings next week. Gapped open with the strength in China. So we'll be watching this as well. Earnings line going straight up in this. Looking at the future earnings, triple digit earnings growth, 20% plus for the next 2 quarters, then tapering off, but very strong earnings profile on this stock. Yum China Holdings also building this base here, another double bottom structure, very similar to JD with a 5144 pivot. So this is attractive. Axon, after a big stage 1 base breakout in an earnings gap, a monster earnings gap from last quarter, went into this nice cup with handle base. 47 days, 22% deep, which is shallow, and a beautiful 6% picture perfect handle. You could have tried a starter position on this on Friday or a cheater position, traded nice volume, and presented itself with an early entry heading into earnings in a few weeks. So we still have time, but beautiful stage 2 cup base with extremely strong sales, earnings very good, just a very solid company that institutions love. Rubric, new IPO, TurboTection is in this, did make 52-week highs on the week, and just a massive high type flag formation on this name. Broke out of that this past week. Not much volume, but just grinding higher. All right, SE, this is the Amazon of Singapore, and this has been in a very strong trend here. Earnings in about 3 weeks, but made a new 52-week high, broke out of this nice cup base a couple weeks ago and has been trending higher. Snowflake, also after this huge gap up, stage 1 base, broke out into new highs, came back in and broke Thursday's lows, but fought its way back up into the buy zone. So pretty good action, just 3 weeks of steady climbing on Snowflake. Royal Pharma, a new stage 1 consolidation here, broke out the past couple weeks. Not sure exactly what this company does, but it's showing a lot of strength, so I'm watching this stock. And Ferrari with a stage 2 base breakout this week on earnings. Not a fast stock, but cars are faster than the stock, but it did have a nice move off of earnings here and meandered its way higher on the week. CLS, contract manufacturer, got hit hard during the DeepSeek Monday, bounced back and quickly made a new 52-week high within a week. Had a nice earnings reaction and made new highs after the earnings reaction, is maintaining its high. So this is one of the few hardware-related stocks that's made its way into new high territory after DeepSeek. Vago, Broadcom is another one that's holding up fairly well after DeepSeek. It had one day where it broke the 50-day moving average. And then IoT is another one that we're watching. This broke out in new all-time highs last week. And Mueller Water Products, another non-tech related stock that broke out on earnings this week after a 3-week tight going into the earnings 2 weeks ago. TKO, entertainment company, pay-per-view, very strong. Not viable right now, but you've got the ants formation here, the Dave Ryan Ants formation, just a steady grind on big volume here for the last week. So not sure what's going on there, but earnings in 2 weeks. So good action there. Team Atlassian, earnings gap holding above the high volume close of the gap day. Very positive watching that. Nebus, this is the old Yandex from Russia that basically divested itself from Russia and they're reincorporated in the Netherlands. NVIDIA put a massive investment in this company back in December. Company IPO'd in October, and it's just grinding higher. It's a big AI cloud hyperscaler. They also own some robotics. Very interesting company with a strong management team of data scientists and AI experts. So this is certainly a company to watch. I believe all this past trading on the weekly is the old Yandex, and then it stopped trading. But NVIDIA has a big stake in this, and I think they added to their stake here recently too. Tempus AI, I believe NVIDIA also invested in this company and broke out to new highs. Not making any money yet, but strong heat there. In Oklo and small modular nuclear reactors just continuing to grind higher. This is a data center play, very strong. And that's it for the watch list. And finally, let's get into the important companies reporting next week. Okay, shift for payments. Started by I want to say a 13-year-old or a 16-year-old in Pennsylvania. Very tight, 3-week tight here going into the earnings. Very strong, hanging in the pivot. Going to be interesting to see how those earnings are. Globally Online, Israeli software, enterprise software company, acting strong, new IPO back in 21. Watching that. Carvana broke through a little bit of consolidation on the week, earnings next week. Watch to see if there's any type of gap here that can take it through its old IPO highs. Car Guru's 3-week tight going into earnings. Car business looks pretty good. Toast, another one which had a very strong earnings reaction last quarter. They're a new innovator in the restaurant credit card area, where the waiters and waitresses come to you with the machine, so you don't have to give your credit card to them, and you just put your tip in, and they have back restaurant software and business software, and apparently the restaurants are really adopting this technology. And there was a short report that came out back here that took it down, but it has a nice cup with handle base, and that could be another earnings gap to watch out for. Cheesecake Factory just been steady in the restaurant area, holding up. Alibaba reporting, we went over the Chinese stocks, so this could be interesting. Mercado Libre, a Brazilian company similar to Amazon, working on a double bottom base coming into earnings. This is a volatile stock. Brazil had a rough fourth quarter last year, and with the US dollar being extremely strong, put a lot of pressure on a lot of these Brazilian stocks. Constellation has energy next week. We have a position in this in Grotection, basically just bouncing off the 50-day, acting well, trading above its deep seek level, and we will be eagerly waiting for these earnings. Uber, another one. Actually, they just reported. My bad on this. This should have been in the stocks to watch area, but Bill Ackman took a big stake in this. It also had a positive earnings reaction 2 weeks ago. And Grail, not sure what they do, but keeps coming up on the screens and just had a massive breakout new IPO. Wix also reporting this week. It's been fairly tight. Its counterpart GoDaddy had earnings last week and it kind of broke down. So not a good reaction on GoDaddy, but we'll see if Wix can beat GoDaddy at their own game. And Walmart has earnings, and that's just been a very strong stock. And that's it for the earnings coming up for next week. Finally, let's go over the economic data and then we'll wrap it up. So Wednesday, we have housing starts coming up and building permits. Tuesday, we have the NAHB Housing Market Index and builder optimism. Friday, University of Michigan consumer sentiment. So some important economic numbers next week, not as much as what we've seen, but we'll watch out for those. And that'll wrap it up for today. So we would love to hear from you. My email is todd@revereasset.com. Our phone number is 855-REAL-WEALTH. And our website is revereassetmanagement.com. We'd love to have you for a client. Please call our number, speak with Dan or Don Vandenborg, our head portfolio manager. And we thank you and look forward to hearing from you.